For years, the three scariest letters in crypto were SEC. Projects would pivot, lawyers would bill by the hour, and entire communities would sweat bullets just waiting for the next subpoena to drop. Then last month, a little-known token called ZBCN didn't just survive, it completely flipped that script. The SEC issued a no-action letter, essentially a regulatory hall pass confirming ZBCN isn't a security. Think about that. Bitcoin and Ethereum needed years, even decades, to achieve that kind of implicit clarity. And while mainstream headlines were still snoozing on this monumental news, the smart money was already moving. Coinbase, Circle, and Solana Ventures quietly wired in $35 million. If you're wondering why the biggest players are sprinting in before your favorite influencer even utters the word zebec, stick around, because by the end of this, you'll understand why regulatory clarity is crypto's ultimate cheat code, how ZBCN just activated it, and what that could mean for the price when the crowd finally catches up. 1. The old world. Let's rewind for a moment. Before this news, institutional desks treated most altcoins like a hot stove. You just didn't touch them. Why? Custody headaches were a nightmare. Compliance lived in a constant gray zone, and the lingering ghost of the Ripple lawsuit kept even the most adventurous family offices firmly on the sidelines. Sure, those DeFi yields looked incredibly juicy, but general counsels just kept saying, hard pass. That institutional risk premium showed up everywhere. Thin order books, wild, unpredictable candles we all know too well, and a constant lack of deep liquidity. If you wanted to attract big, sticky capital, the kind that moves markets, you needed two things: a qualified custodian willing to hold your assets, and a token the SEC wouldn't label a security. Until late September, almost nobody had both. It was a catch-22 that stifled innovation and kept billions out of the market. 2. The breakthrough then, on September 30th, 2025, something truly remarkable happened. The SEC's Division of Investment Management quietly posted a no-action letter, a document that usually flies under the radar, stating that certain DePIN tokens, those specifically used to incentivize decentralized physical infrastructure networks, don't meet the infamous Howey test when specific, well-defined conditions are met. For those unfamiliar, the Howey test is the four-pronged legal standard the SEC uses to determine if something is an investment contract and thus a security. It asks if there's an investment of money in a common enterprise with an expectation of profit, derived solely from the efforts of others. DePIN tokens, by their nature, often have utility that complicates this, as they reward participation in a network, not just passive investment. ZBCN, which powers Zebec's real-time payment protocol, didn't just fit the bill. It became the first payroll-focused token to receive this kind of explicit clarity. Translation for the institutional crowd? Registered funds can now hold it without fearing enforcement storms, without worrying about being caught in the crosshairs of a regulatory crackdown. Even Commissioner Hester Pierce, often dubbed Crypto Mom for her progressive views, nodded to it on Twitter, calling the letter a recognition that incentive tokens can function without being investment contracts. That single, unassuming paragraph removed more regulatory fog and uncertainty than most bills stuck for years in Congress. It's a landmark decision that could pave the way for an entirely new wave of institutional adoption. 3. Why institutions? Care, look, custody is half the battle. Classification is absolutely the other. This no-action letter didn't just bless ZBCN. It simultaneously clarified that state-chartered trust companies can now act as qualified custodians for crypto. This is huge. It means established entities like university endowments and massive pension funds can park their ZBCN holdings in audited, regulated vaults, meeting stringent fiduciary requirements. You combine that with Circle's robust USDC integration, enabling instant payroll streaming and global liquidity, and what do you get? A compliant, cash-flowing product that checks all the institutional boxes. It's no wonder that within days, Coinbase Ventures spearheaded a strategic top-up, pushing ZBEC's total funding past the $35 million mark. When compliance officers smile, treasuries open their doors. This isn't just about a token. It's about building the rails for mainstream finance to finally engage with decentralized technology. 4. Smart money on chain. Don't just take our word for it, look at the wallets. Starting October 2nd, Nance and tags linked directly to Briar Capital, and Lightspeed began accumulating significant positions. We're talking about smart money here, not just retail degens. One particular address, widely suspected to be institutional, vacuumed up 600 million tokens across 3 different DEX liquidity pools, pushing daily active addresses on the zebec network to an all-time high. Even more telling, exchange reserves dropped a full 14% in a single week, indicating a massive supply move to cold storage. A classic institutional behavior pattern where assets are moved off exchanges for long-term holding. Meanwhile, OTC desks in Hong Kong were quoting $2 million blocks with virtually zero slippage, a clear sign of deep, private liquidity being accessed. Retail, bless their hearts, hasn't even noticed yet. Volume still sits comfortably under 30 million daily. That divergence, my friends, is textbook stealth accumulation playing out in real time. 5. Utility beyond the hype. Regulatory green lights are utterly useless without actual users and real-world utility. And this is where zebec truly shines. It isn't just a speculative asset, it's a functioning network. Zebec already processes payroll for over 100 companies, streaming more than $300 million in real-time wages. Imagine that. Employees can withdraw their earnings by the minute if they want. No more waiting 14 agonizing days for a paycheck. This isn't theoretical, it's happening right now. The network is live and robust, operating across multiple leading blockchains, including Solana, Ethereum, BNB Chain, and Sui, ensuring broad accessibility and scalability. Plus, a recent strategic acquisition of a UK fintech company brought not only 50,000 additional users, but also an e-money license, further embedding zebec into regulated financial ecosystems. This is real people, real money, real time. 6. Ecosystem. Flywheel. The beauty of zebec's design is how it creates a self-reinforcing ecosystem, a true flywheel effect. Circle's integration allows workers to cash out their stream wages directly to USDC, providing seamless off-ramps. The partnership with AllUnity and Deutsche Bank is opening crucial European rails, expanding zebec's global reach. Then there's Pyro Finance, which supplies on-demand salary advances using ZBCN as collateral, creating another layer of utility. Here's the kicker. Every participant, from companies paying employees to individuals accessing advances, needs the ZBCN token to pay for gas, unlock discounts, or access premium features. This creates a reflexive demand loop. The more companies on board, the more tokens get locked up in payroll channels, effectively shrinking the circulating supply just as institutions are buying it up. It's a flywheel that actually spins, generating tangible value, not just a pretty diagram in a white paper. 7. Price action. Snapshot, let's talk price. ZBCN bottomed out around 0.2 cents last winter, then ripped to 0.7 by May, showing incredible early momentum. It then cooled off, as assets often do, to the mid-30s, where it formed a textbook double bottom, a classic bullish reversal pattern. With the no-action news hitting the wires, the Relative Strength Index, or RSI, broke decisively above 50, and the MACD crossed bullish on the one-day chart, confirming the shift in momentum. Key resistance currently sits at 0.55 cents. If ZBCN can flip that into support, the next cluster of sell orders doesn't show up until the May high. If overall crypto sentiment remains neutral, a measured move from this double bottom implies a potential 80% pop. This isn't a guarantee, of course. Nothing is in crypto. But the math and the technicals are certainly compelling. So there you have it. ZBCN secured the SEC's blessing, locked in $35 million from some of the bluest chip investors in the space, and is quietly streaming salaries while the market sleeps. Regulatory clarity plus real utility. That's the holy grail everyone claims to look for in crypto, and this project just delivered both. Will it go up forever? Of course not, nothing does. But when institutions are accumulating into thin floats while supply contracts, the setup frankly speaks for itself. Do your research, manage your risk, and maybe, just maybe, you'll front-run the headline that CNBC drops 6 months from now. What do you think? Is this an overhyped regulatory nothing burger or the single most underappreciated catalyst in crypto right now? Drop your take below, smash that like button if you learned something new, and I'll see you in the next update.